You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose, and welcome back to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, 11 o'clock a.m. Eastern Time, share some tidbits once in a while. We'll even share our trade of the day. Every day we have 4 topics. Today we're going to go over the Qs. We'll start off with the overview of the market. So we're going to look at the NASDAQ. We're going to look at the VIX. We're going to look at risk. Let's see where the market's going. After that, I want to talk about education. Without a doubt, education mitigates risk. If you're not comfortable with options or in any part of the financial markets, take it slow. Paper trade. The best thing that you can do is educate yourself. Yesterday after filming, I'm sitting here with a videographer, his name is Telvin, and he was saying, hey, I'm interested in options. They've always been a little confusing. Can you simplify them? And how much do you need to get started? Can you get started for $2,000, $3,000? So I'm going to show you exactly how you can get started trading options for relatively a low amount. And then finally, we're going to talk about a game plan for some of our open positions. So with that being said, let's head over to the slide deck. Let's see what we got. Okay, so I have you open right here. We have the QQQ, the NASDAQ. Now, the NASDAQ, when I took this morning, it was trading at 457. I'm going to pull up a live chart right now. Because right now, the NASDAQ is trading at 452, right here, where my mouse is. Now, yesterday's low is going to be 452.23, so we've already taken out yesterday's low. We will see some support down here at 447. Now, if I put the Qs on a weekly, last week's low in the QQQ is going to be 448. I would expect 448 to be very, very big support down here. 448 as well. Right here, if you could see my mouse. So this week, last week's low, 3 weeks, 4 weeks, 5 weeks ago, the low was also 448. So that's what I want you to watch. In addition, the volatility indices. If we're going to look at the VIX, I'm going to put the VIX on a daily time frame. To give you an idea of what it looks like, let me just open it up a little bit so it's easier to see. Now we have these what's called expected moves. Right now, the VIX, a 30-day measure of volatility, is outside its expected move. You could use this 1976 in the VIX. If we get under there, expect to rally. The more that we stay above this 1976 level, the more risk there is and the higher probability that we trade lower over time. Hope that helps for an overview of the market. Again, QQQ 448 is that major support, and then watch that VIX real closely. I think that'll really help you guys. All right, I want to share a cool comment from Dimitri. Dimitri says, good to be here, JR. I was impressed by your free portfolio management and the knowledge you're sharing. I hope I can make use of it because I overreached last year and it impacted my portfolio significantly. So Dimitri just joined our All Access program, and Dimitri joined after following the promotional portfolio. So underneath mastersintrading.com/live, we have our entire promotional portfolio. So you guys can follow along. These are the trades that we share for free. Of course, we have our programs as well. We're sharing more of our unusual option activity trades, our earnings trades, and our divergence trades. But this just gives you an idea of the kind of trades that we follow. So in the promotional portfolio, these are the last trades that we've shared. BZ, Tesla, Meta, CCJ is a uranium trade that we closed. POS is a silver trade we still have open, and then we have S as well. So POS, we're still holding all of these holdings. We're very comfortable. We're very confident. We'll be holding these until expiration or until we could take out a big fat profit. Love these comments. Without a doubt, education mitigates risk. So people come in for the trades. Sure, you can get a great return here and there, but overall, it comes down to the education. It comes down to learning lessons so you can repeat these lessons over time. That's why I wanted to share these awesome quotes where people really dig into the difference is the education. So with that being said, I had a great question from Telvin about trading options. So let's talk about trading options with CENX. CENX, last trade, 1185. We're just looking at the calls here. These December options have 100 days until expiration. So CENX, last trade is 1185. Let's hypothetically say that we want to buy the 20 strike. The 20 strike is trading, you could buy those for 30 cents. A trader, if they were bullish, CENX, if they wanted to get long stock from 20, they could buy those calls for 30 cents. A trader could buy one for $30. A trader could buy 10 for $300. If a trader buys one option, $30 of risk, that trader is long stock from 20. Hey JR, why would I want to be long stock from 20 if it's trading at 1185? Great question. Because you get massive leverage. You have the option to be long stock at 20. You don't want to be long stock at 20 right now because it's trading at 1185. But if CENX jumps up to 30 and you still own that one call from 20 for just $30, heck yeah, you want to be long 100 shares from 20. So your position is automatically exercised. You're in the money. You're long stock from 20. That's what options give you. You could buy the stock at 1185, but the options allow you to buy it at 12. You got to pay more. You could buy it at 13. You pay less. You could buy it at 20. You pay less. Hey, you could even buy the stock at 25 and you're going to pay less, and that's far more speculative. Another example, American Airlines. Last trade, 1094. Anything under 1094 is considered to be in the money. Anything outside of 1094, 11 or higher, is out of the money. In the money is called intrinsic. Out of the money is all fluff. It's nonsense. If you buy those 11 strike calls with the stock at 1095, it's fluff. You're paying 35 cents a premium. It's not there yet. It's not intrinsic. It's not real. So options, if we look at the 5 strike for trading $6, well, that 5 strike for $6, that's all intrinsic. 594 of intrinsic. These are deep, deep in the money. These are all pretty much stock. Here's one little tidbit to get you started for those newer option traders out there. You'll hear about the Greeks. Well, the most simple and straightforward of the Greeks is going to be delta. You can look at the delta as the likelihood that your position ends up in the money. So the delta of the 11 strike is 50 because you have a 50% chance of being in the money. Stock can go higher, stock can go lower. But what about the 5 strike? The 5 strike has a 100% chance of being in the money in the next 10 days. So the market is just saying, hey, 100% of the time, get being long stock from 5 with 10 days to go until expiration with the stock trading 1095, it's just stock. There's no difference. Options do just that, guys. They give you options. They allow you to take a step back, and rather than just own the stock, you could own the stock or trade the stock in so many different ways. Telvin, if you could pull me up live. So for my newer option traders, hopefully that gave you a little overview. Simplify how you look at options. Too many are scared of trading options, but when you buy options, you can never lose more than you risk. So think about options just like stock. If the stock's at 12 and you want to be speculative and buy the stock at 15, go ahead, take a shot, but that's all premium, right? That's the fluff because the stock's not at 15. You're betting for the option to be long if that stock trades above 15. Thanks for watching, guys. We're going to go over our game plan to deal with some of our open positions. We'll see you tomorrow, 11 o'clock Eastern.